So Nio just reported some strong earnings. However, stock price doesn't seem to think so. Currently, as of recording this video, the stock is down over 13%. It's been hit pretty hard. I'm assuming we'll probably close around here by the end of the day. So why is Nio Stock falling? What's my perspective on this? If you are someone that either holds Nio shares today, considering investing in Nio, it's a company that you follow, you definitely want to watch this entire video because I'm going to provide a ton of insight. I'm going to go through the earnings with you guys. I'm going to compare it to its competition, Tesla. And I'm also going to provide some other things that could be driving the stock price lower today. And then we'll finally look at the charts as well to see, okay, is this something that's a buy the dip opportunity or should we be waiting for lower prices? So guys, smash the like button down below. And if you're brand new to the channel, consider hitting that subscribe button and hit the bell notification as well. So when I release new videos, Nio and other stocks I talk about, you'll get a notification right away. So Nio reported mixed results here from the high level headlines. A beat on EPS, but a miss on revenue. However, the key thing is that revenue grew by 149% year over year, and they had over $1 billion in revenue this last quarter. Quarterly deliveries were 17,353, which is a very strong showing for the company, and gross margins continue to improve, going from around 14.5% last quarter to 17.2% now, and this is actually a very positive sign for future profits for the business. For the longest time, there were a lot of fears about, Nio's profitability. Are they ever going to make a profit? Because they had negative gross margins for the longest time. But in the last year, they managed to turn that around, flip it on its head, and the last few quarters have seen some good improvements in this area. And what's amazing is that they're getting closer and closer to Tesla's mid 20% gross margin that they maintain. So this means that with scale, Nio theoretically should be able to have as much, if not more, profits than Tesla at some point. Now for Q1 2021, Nio expects to keep increasing deliveries to 20 to 20,500, which would be a 15 to 18% increase quarter over quarter, which is a strong showing once again. And revenues expect to increase as well and remain over that $1 billion mark. So overall, yes, they didn't miss technically on what analysts were expecting for revenues, but guys, triple-digit percentage growth year over year. That's nothing to discard and discredit. Nio is a growth stock. They're a growth company. And I think this was actually a really strong quarter. However, the market doesn't seem to agree with me and with us really. There's a lot of red today in the stock market, and Nio is one of the hardest hit stocks. Why? So I was actually reading around to see, was there any major catalyst apart from earnings that is pulling Nio stock price down today? And I did come across something. Nio confirmed that the global chip shortage will impact their production. They're going to produce around 2,500 less cars a month because of this, which of course affects their fundamentals as well. So in my opinion, this global chip shortage combined with the fact that they missed on earnings, expectations were high, they didn't meet it, it's kind of a perfect storm. And then to add to that, the market isn't doing so well today. It's pretty red today, especially with tech stocks. So it's just kind of pushing and putting more pressure here on Nio. Now, the one thing I really want to stress is the fact that the stock, in my opinion, was priced to perfection. When stocks rally hundreds of percent, in Nio's case, in just about a year, investors are expecting a lot. Investors are expecting, to the moon results. And if the company does not deliver on that, people are going to sell out. Investors are going to punish the stock. And Nio is not the only one that's, on this high pedestal. Tesla is also up there. So if they report a quarter, which could happen now with this global chip shortage, that, hey guys, we're not going to meet what analysts were expecting, we're going to have actually less revenue and less profits this quarter, investors will probably punish the stock. The thing is though, if you look at Nio, it's very impressive from just the numbers. If you look at the year over year comparison, vehicle sales are up massively, margins keep increasing, revenues are up, but the one red flag here is that they are losing a lot of money. And while it's an improvement year over year, it's still a lot of cash to burn. And I think that we're probably going to see a few more rounds of dilution over the years with Nio. Probably not anytime soon because they've done that recently, but Wouldn't be surprised if we see, another one towards the end of 2021 and maybe something in 2022. But anyways, what I'm trying to get at here with all of this is kind of a game of balance, okay? Investors have this expectation. Nio needs to either meet that or in most cases exceed that for it to justify the stock to keep moving higher. If we don't get that, the stock's going to move lower. It's as simple as that. And that's what we're seeing here happen, in my opinion, to trigger the sell-off in Nio. And then you have the global chip shortage coming in. You have, the market selling off coming in. You have the fear of EVs all being pulled down coming in. Yeah, there's a lot of headwinds right now with Nio. Okay, so now before we get into the charts of Nio to see where this trend could be taking us, let's do a quick comparison between Nio and Tesla and their valuations. Now, in terms of revenue, it's not even close. Tesla dwarfs Nio with $48 billion of revenue expected this year and over $62.5 billion expected next year. However, in terms of price of sales, they are fairly comparable. For 2021, you're paying the same premium for Nio, but 2022, it is slightly cheaper at a 8 price of sales versus Tesla's 10. But here's the thing, you gotta remember, Tesla is profitable. Tesla has scaled much more than Nio. They're completely vertically integrated. They're gonna probably expand to a lot more sectors than Nio will over the years. So there's a lot more growth potential when you're looking many years out for Tesla to be a $1 trillion plus company when you look at all their business segments. Now with Nio, they have their own positives as well. They have good gross margins now. They're probably going to be the #1 player in China over time. So that's a massive market for them to take over. And they have better growth right now than Tesla. They're seeing much stronger growth. So Nio has its pluses too, but when you're weighing the pros and cons, Nio's still losing money. Tesla's making money, Tesla's still growing, and Nio's still growing. And they're both at pretty comparable price to sales ratios with, in my opinion, Tesla having more potential over time. I think the answer is pretty clear as to which of these two stocks is a better investment today. So it's really kind of personal preference here. Do you pay for something that's more risky, losing money, but higher growth? Or do you pay for something that's less growth, but a more stable company, part of the S&P 500, and possibly the potential to go into more market segments, which would justify even higher valuation? I don't know, it's really personal preference here. Now, here are the charts for Nio, and they're starting to look bearish for me. On the daily, while we are oversold, Nio did break the orange line today, and it does look like we're probably going to close below this fairly clearly here on the day, unless we have some sort of crazy reversal before the market closes. Now, this is a bearish sign implying more selling pressure and possibly lower prices, but it's still too early to tell with just a single day's data. On the weekly, we are very stretched from our moving average. We're finally starting to come down, and I think we may find support around that $40 mark, which we have found before. But if that breaks and the overall market's selling and there's just negative sentiment everywhere, guys, we're headed most likely for that $32 price tag. Now, I personally don't see Nio dropping below $30 per share. I think the company has, advanced so much in the last year to 2 years that they justify some sort of premium valuation, and they justify, investors actually paying a pretty penny for this. And I think $30 to $40 per share is already a good premium. Below that, I think we're starting to get pretty oversold on the stock, so I think the chance of that is fairly low. But that being said, I think the chances of us dropping below 40, that is pretty likely to happen. So the question of this video, why is Nio stock falling? And I think I outlined a few cases for you guys. Price to perfection, they did not meet perfection. Global chip shortage, that's definitely contributing to some lower expectations for next quarter, and investors aren't happy with that. And then of course the market sell-off. That's going to put some selling pressure on the stock, because when everything falls down, these high growth stocks get hit the hardest. But either way, guys, just remember, in the end, when you're investing in companies like Nio, you have to make sure that you understand what their fundamentals are, and that, when you're paying a $50 billion valuation for this company, for example, it needs to someday be able to justify that. Now, is that day going to be in the next couple of years? Is that day going to be in the next 10 years? The longer out you go, the more risk you're taking on, because when things get uncertain, investors are going to sell off those speculative plays, and they're going to flood into companies that are more certain to produce, profits and earnings and all that stuff over the short term. That's just how the market cycle works. But regardless, whether you're an investor in Nio, you're considering investing in Nio, you have a big position in this stock, or you may be looking to average down, just don't panic. Just take this for what it is. It's, if long term, it's maybe a gift here to buy this in the low 40s. Because if you believe that Nio can justify a $100, $200, $300 billion market cap over the next few years, then yeah, you're getting a pretty good deal today. So guys, I'd love to hear from you in the comments down below. What are your thoughts on Nio? Is this something that you are planning to put more money into, or are you just going to let it ride itself out? Just watch it from the sidelines and just kind of see what happens. Let me know in the comments. Love to hear from you. But either way, guys, hope you enjoyed this quick update video here on Nio. Don't forget to invest positively, and I'll see you in the next one. Peace.